Last year we saw, maybe 50 or so million in revenue across all of DePIN. We had a few protocols hit 7-figure revenue, like Helium, Akash, GEODNET, a few compute protocols, Glowe. And the question is, how do we scale those revenues along with solving like these other hard problems in DePIN? Like, how do we do verification? How do we prevent double dealing? Just like very like technical problems. So what we've started doing at Messari is like trying to create the language, conceptual framework to understand how DePIN really works and how we can like scale both the supply side, the demand side, how we can finance DePIN, like compute farm or a solar farm, acquire very expensive DePIN infrastructure.
What's up, guys? Welcome back to Shoot the Shit Pod. I'm kicking in here for as moderator here with the Enterprise guys. We're recording on April 4th, and we're going to talk it a couple days after the tariffs. We're going to do some macro stuff, some Jupiter and Superapps on Solana, and then a ton of other stuff at the end of the show. But to start it off, we're going to talk about the tariffs, hot narrative of the week. Everyone's saying we're going to recession. Is this actually crypto will live in strike? So just to give some numbers to tee you guys up, S&P down 6% since the tariff stuff came out. Bitcoin on the weekly is only staying flat. ETH down 4%, Solana down 5%. So the question is, this crypto relative strength real or not?
I mean, it's looking pretty good right now. I feel like there's this kind of bifurcation happening, right? Where like we're going to see how people perceive Bitcoin within the next coming weeks. So like, is this actually an asset that is just levered on the NASDAQ, right? Or like, is this an asset that has some different types of characteristics they're eventually going to decouple, and we kind of go into like a new narrative of what Bitcoin actually is as an asset?
Okay. I think if we like put in a table of every time BTC or crypto broadly had some relative strength going into a weekend, you would probably want to bet against it like 90% of the time. But I do think that like there is a small chance of what you're saying. Like it could be reflexively good to the upside if it maintains its strength for long enough that people start buying into some sort of narrative around how that's changing. I'm doubtful. Like we'll see what happens this weekend. I wouldn't be surprised if we're getting faked out right now. I don't think anyone's like rushing to hold a 100 vol assets over a weekend where there's a lot of headline risk. But I don't know. We did bottom a bit. We've bottomed before TradFi in previous instances, so it could be one of those scenarios. I'm a little more skeptical just because I feel like we've only just started to price in some of this uncertainty. Like we were really in denial there, and like I think a lot of people were positioned into the second for like a potential clearing event where Trump would come on, and you saw it with the first headline that came out that they were putting on like 10% reciprocal tariffs, and the market pumped, and Bitcoin was up like, I forget, like briefly up like 3% or something. And then he pulls out the poster and it's like worse than the worst case imaginable. and they came up with these like new metrics for just like claiming that these are like reciprocal tariffs, but it's actually just like the trade deficit. What was the metric? It's like the trade deficit divided by
the trade deficit divided by 2.
Yeah. and then like some of the trade advisors came out and they like brought this like no, this was a very complicated formula that we devised. You can see there's like Greek letters in the calculation, and then the Greek letters are like 4 times 1/4, and it just cancels out. But yeah, I think that was an opportunity that people were positioned for, where they could like sell vol, be like, all right, we know that tariffs are not going to be worse than 10%. And this is it's not going to get worse than this. But instead of that, we got the opposite. And like, we actually have no idea how much worse it might get or how long this will go on for, because negotiations are up in the air.
Yeah, I'm largely in agreement with Andrew. I think Bitcoin's price is probably going to be fairly correlated with the market downturns in the short run. I think people have to really understand what the effects of tariffs are going to be on equities. So basically, margins are just going to compress by moving manufacturing back onshore. That means less money, less dividends going to the equity, the shareholders, potentially more money going to the workers. That's still up for debate. But in the long run, if tariffs remain, I think that's pretty bearish on equities. Like we could look at a decade bear market, similar to what we saw with Japan since 1989, where the markets still haven't recovered. So I think looking at that longer view, looking at Bitcoin, which is a completely different kind of asset from an equity, right? Scarce asset, 21 million max supply, store value, decentralized. Government can't really do much in terms of monetary policy to affect its intrinsic value. I think that's when Bitcoin decouples, but it's not going to be in the next, 3 weeks. It's going to be the next 6 months to, multiple years where we really see that happening.
Yeah, I love that everybody was basically like, all right, so the base case is 10% flat tariffs. The bear case is 20% flat tariffs. And then Trump just whips out this gigantic billboard with like all these different tariffs. It's like 46% on Vietnam. Like, what are we doing here? But in terms of decoupling, yeah, like Andrew said, I mean, we've been trying to get this decoupling narrative to happen for so long now. It almost never works for an extended period of time, especially not to the downside. I mean, we've seen some like outsized returns from Bitcoin during specific periods when bullish stuff is happening in the background, like the ETFs or like a pro crypto presidential candidate. But in terms of like long-term decoupling, I feel like if there's any time for that to maybe start to kick in, it should be now. I'm not saying it will, but it could be now. Like we're larger than ever before. There's more ways for people to buy Bitcoin. We've basically spent like the last year gearing up, having all of these funds and institutional buyers add Bitcoin to add IBIT or whatever to their mandates. And so they're kind of ready for it. Obviously, people don't really understand it quite yet in terms of what type of asset it should be within the overall like liquid asset picture. But I mean, what else do you do here, Andrew? I'm curious for you. Like it's like obviously people are talking about like US centric flows kind of disappearing, maybe diverging to other areas of the world. And you did see some outperformance there like this week with indices in China and whatnot performing fairly well compared to what was happening with like the NASDAQ and the SPY and the Dow. But then that kind of reversed like today and immediately post tariffs, because it's like, well, who benefits from this? Yeah. Nobody really benefits from this. And so where do you put your money? I think the simple answer is probably if you're risk off, you risk off everything. And that includes Bitcoin. But it's kind of an interesting like paradigm we're in right now where Bitcoin is large. It's like there. You can't really ignore it as an allocator. You can now buy it. It's like compliant to buy. And you have just basically every other asset class looking like absolute shit. And so like, what do you do? Like, do you think about it at all at that point? Do you think they even consider it?
I think they just, in these types of scenarios where usually before these like crash events and this like correlation to one events, you get outperformance. Like we saw outperformance from things like gold, briefly from treasuries. You basically have like three hedging options. It's like gold, treasuries, put options, or you're just long volatility. And like usually during crashes, as we're seeing today, like not even the hedges will always be working. Like gold, for instance, like as people might be getting margin called on other assets, like their gold position is like one of the few things that they can pull liquidity from. So like that's down 3% today and probably put in like a decent short-term top. But yeah, like people just will pay up a lot for front month VIX futures, near-term vol, like maybe short-term treasuries. And so like when you compare those options to Bitcoin, it's just entirely different characteristics. And like personally, I don't think like allocators are not using these types of in moments of max uncertainty, you're probably not like, oh, should I add this new asset to my allocation? Like probably not. But at some point that probably will come more into discussion. But I just think the uncertainty is like so high right now. And instead of getting that sort of clearing event that people were expecting on the second, the timeline is even less clear now for how these negotiations will go, how long they'll take, whether he'll even pull back across the board. It doesn't seem like it. We are also like, the timeline's ambiguous for like when the Fed might step in. Like literally Powell just talked today and he seems like he has no interest in making this he has no interest in being pressured to do anything on any timeline that is not based on the data coming out. So like he's going to wait for the labor market to show cracks. He's going to wait for, well, probably that first, and for growth, for evidence of like a growth slowdown before he does anything. That could be like that data could show up, in a month or something. And so we'll just be sitting here, volatility above like 40, stocks going down 5% a day, and like we're just getting smoked until there's some certainty brought in. So it's a very difficult environment.
Yeah, I feel like tariffs will be a catalyst for Bitcoin education, and that the existing like knowledge and conception of how Bitcoin and digital assets more broadly work, both in Wall Street and just among people with capital, which tends to skew towards the older generations, is just like not there yet. And now with people like examining their options, they're going to start looking into Bitcoin. But it's going to take at least a few quarters until anyone's like, let's actually move money here. We're going to have to go through earnings season, see how these tariffs actually affect, earnings reports. We're going to have to see kind of like what Andrew said, like wider economic data on inflation, on employment. Like investors are going to be considering all of this before they look at Bitcoin. And I think during that time, they're going to get up to speed. They now have the infrastructure in place to invest in it, which I think is critical. But I don't think we should expect people to just go all in into Bitcoin right now.
Yeah, it seems like you guys are all not buying the strength. I've also seen where GameStop is the one buying and kind of keeping Bitcoin up, or there's other just like different stuff that are keeping Bitcoin up. But something we do know that the tariffs actually affected was the Circle IPO. Some big news out this morning. I knew Andrew, you just wrote a great report deep diving into the Circle IPO, and then a couple hours ago just found out that the IPO is getting delayed because of the market conditions is what people are thinking. So Andrew, walk us through the Circle IPO. It was coming out at like a $4 or $5 billion valuation, I think they were targeting. So walk us through like how that went through, and then why you think they decided to delay it, and then we can kind of kick it to everyone else and then talk about it.
Yeah, I think there was like 4 or 5 other companies that also pulled IPO plans today. So like this is another ripple effect of this uncertainty. Like no one wants to try to raise funds and go public in this market environment and just have their stock nuke 10% on opening day. It's not a good look. It's not good for anyone. But before that happened, the point of my piece was that everyone's kind of looking for like a pure play bet on stablecoins because it's uncorrelated to people speculating in crypto. And based on, we've all seen the headlines for like Tether profits, and like everyone's kind of hyper focused on what a good business model it is. But the point of my piece was that, as legislation gets passed and other people get the green light, plenty of crypto native firms and banks themselves are looking to get into the space. This like window of regulatory ambiguity that Circle operated in and kind of earned like this risk premium this entire time for doing that. My point is like that's probably going to compress pretty quickly. They're going to get margins will compress from a bunch of new competitors entering the space. They're already paying Coinbase about like 60% of their revenue that they get on their reserves. 99% of their revenue is just the cash they get from the return on their short-term treasuries. And so your bet on how cheap or expensive they are is entirely dependent on, where you think rates are going over the next year. And, based on the forward pricing that I looked at yesterday, which probably already changed a lot just today, short-term rates were expected to go down like 1% over the next year. And it's kind of like a 20 to 25% hit to their revenue, just baseline, nothing else changes. Like no costs go up, margins are the same, operating expenses are the same. And so they have to grow USDC by a lot. And admittedly, they grew USDC in circulation by like more than 35% this quarter in Q1, which is like, that's really big. That's huge. So the question is like, can they continue to do that as new competitors enter the space? I'm a little skeptical. I think like you're just going to have a bunch of players. It's going to be a bit more fragmented. They're trying to like seed and like improve their network effect. They just like entered into an arrangement with Binance for getting them to hold more USDC on their balance sheet, and Binance gets paid monthly incentive fees if more of their users hold like higher USDC balances. So that's interesting. There's a bunch of avenues they can go down, but ultimately, you're making a bet on rates, and based on some napkin math, like it's not the most attractive valuation based on where rates are going. And in the scenario where we get a huge growth slowdown from tariffs, it's like, rates could get cut to 2% or lower very quickly. And in that case, your revenue is getting slashed in half even before your expenses change at all. So those were my main conclusions there.
Andrew, do you think this is a stablecoin problem or more of a Circle problem? I mean, I guess what would be the structural differences between Circle's business model and Tether's to where you get such a wide gap in profitability?
I think part of it is that Tether kind of quickly established itself as this like kind of like shadow banking apparatus for consumers in like emerging markets, and it just like partnering with like Tron and Binance very early and enabling like low fee transfers on USDT, it kind of just set this sticky behavior for like millions of people who use Binance abroad. It's like an easy way to save in dollars, easy way to transfer money peer to peer without going through these like money operators that charge like pretty high. Like say you're sending like a sub $10 peer to peer payment. These like money unions will have a few dollar fixed fee and then like some FX markup of like could be like 3 to 5%. And so on the 10 to $20 that you're trying to send to someone in a foreign country, it's like you're paying a lot. And so if you can send Tether anywhere, it's just like that was super attractive at the time. And it's like they do have a moat around that. And Tether's competitive advantage there too is like it is partially dependent on it kind of being in this regulatory gray area abroad. Whereas Circle, it's expensive to be regulatory and like have this compliance burden. It's not an edge in some ways because it's just a bit easier to operate outside of that apparatus. So it's not really, they're probably the most experienced. That's part of what I talked about. Like they're the most experienced in dealing with regulators and dealing with compliance. And some of these new competitors like Revolut, there's like some skepticism about whether they're going to enter the market at all because there's a lot of like regulation and compliance burden could be more expensive than they thought initially.
Let's generalize this a little bit. Do you think like the Circle IPO is just a stablecoin delay? Is this going to affect like other crypto companies that were expected to go public? Like I know like Kraken or Gemini was thinking of going public. I know there's like very super early rumors of like maybe like a Phantom, some of these like great projects within the ecosystem that don't really have a token. So is like the Circle IPO, are they cooked? Are they just like they missed their window, or is it just more of like a broader macro econ type of thing?
I think it's just a market uncertainty thing. Like the moment there's some clarity around this stuff and stocks bounce a bit, I'm sure. But then again, like we have seen in the past, like some companies have delayed their IPOs for the same reasons and they still haven't IPO'd. So we'll see. I don't think it doesn't have anything to do with like stablecoins as a market in itself. It's just purely timing.
Any other thoughts there? Or we can kick it to the Superapp Thesis that kind of these Solana. Solana teams are taken. All right, cool. Let's so we saw a couple like mergers and different like plays from Camino. So Camino launched their like MetaSwap thing earlier this week. Jupiter acquired Drip. We see Pump Fund launching their AMM, Radium launching their Launchpad. We've seen that with Jupiter trying to kind of go into like the Pump Fund crowd and participants last summer when meme coins really taken off. So is this going to happen across DeFi, across all of crypto, other ecosystems, and or is this just a specific thing happening in Solana where all these DeFi apps that really were really good at their one niche were communal lending, Jupiter with their DEX aggregator, and just kind of broadening their product suite across the board?
We might see this on some other apps, but I think there's a bit of a difference. Some of the more entrenched apps on Ethereum are probably further along in terms of figuring out their vision. Most of them are already probably DAOs at this point. And they've also been through their ups and downs in terms of like perception and growth. But I guess for Solana, like you just had this period where Solana apps were so highly heralded by the industry, like both like retail investors that were invested and had received airdrops, liquid funds, venture funds that have participated. And so these apps have kind of been the on-chain darlings in a sense, like over the past cycle. And obviously their growth profile is looking drastically different. Like I wrote a report on the memecoin contagion, which is not necessarily calling a perma-top on meme coins, but basically saying like if you dig into the numbers, yes, like a lot of these apps that are seemingly fundamental are kind of all driven by the same base of volumes, and it's just meme coins. And certainly from like just a high level perspective, meme coin volumes actually aren't down that much from where they were like a year ago. They're actually up from where they were at like over 2 years ago. But from just like a relative growth basis, yeah, like they've contracted sharply. And that impacts the economic productivity of like every single app on Solana. Like I don't care who you are, even if you're a Geodo, like that impacts you in some way. All these Telegram bots, which are mostly used to trade meme coins, feeding tips to Geodo, sourcing that as revenue. Like everything is impacted by this. And so when you run out of space to grow as a broader ecosystem, you have to get a little bit more PvP. You have to scale vertically or horizontally, whatever it is. And so I'm not surprised to see this happening on Solana because you're at this point now where investors are expecting you to grow. It's now become almost impossible to grow in the near term, given usage activity on Solana as a chain and how it's contracted from where we were just like Q1, Q4 last year. And so, yeah, it's going to be tough. And so I think this is kind of the natural progression. I think it's a smart thing to do. Why not set your up better for the long term by vertically integrating? You have more control over your inputs and your outputs. We've seen all these other vertically integrated apps find success. And so I'm not surprised, but I think it certainly has made like the Solana environment harder to call. Like I don't know who's going to end up on top. Solana's kind of in this interesting space where users are using all these different forms of distribution, like all these different front ends. They're tapping in at different places of the stack. Since some people are on trading bots, some people are on aggregators. Very few people are actually using, like, let's say a Radium directly on Radium's front end. They're just using some sort of aggregator that's routing all these swaps through these different dexes. And so, yeah, there's like a very low moat for some of these products from like a dex standpoint. So I think it's going to get interesting. Like I'm really curious to see what these apps are going to say to try to differentiate themselves, because like Pump Fund launching Pump Swap, just using a basic AMM, can basically vamp a good portion of Radium's volumes as is. I mean, I really see, like, I struggle to find a serious moat for apps like Radium that are just kind of caught in the middle of not being able to source like meme coin supply, but also not really interacting with the consumer in any way. So it's looking kind of brutal out there.
But I think it's worth pointing out like vertical integration and growing horizontally are like very different. I think the vertical integration makes a ton of sense. Like no one's confused as to why Pump Fund would launch an AMM. But when you look at growing horizontally into like new verticals, so the Camino thing comes to mind, Metaswap versus I typically think of them as a lending protocol, it kind of raises questions about why do you want to go into an entirely new market? Like things are still small, like lending is still very small in Solana, and you would think there's a lot of places to grow and optimize there. So is it kind of an admission of, I don't want to say defeat, but maybe the path forward is less clear in our original project and it's almost a pivot?
I think everyone's looking at app revenues. I think everyone's looking at app revenues, and right now it's like what is generating revenue on Solana outside of like swapping for meme coins? I mean, there's less demand for lending than there is on the EVM. There's less like tertiary ecosystems that have been constructed, and like just on a comparable basis, like Solana outperforms everybody still in terms of DEX volumes. Well, we've seen that flip actually with Ethereum recently, but like just the surface level numbers Solana is putting up is very impressive. Like let's not get it twisted. But if you're talking about like month over month, quarter over quarter growth, like what is going to generate the next wave of growth that just lifts like all the boats in the Solana ecosystem? It's kind of tough. So I kind of agree with Kinji. I think it's definitely not an admission of defeat, but it's like, okay, if we want to stick around, maybe we want to try to build out our offering and see what catches a bit.
I'll take the other side. I'll jump in here since I read the State of Solana report. And I agree a little bit with the app revenue stuff. Like when I did the Q4 quarterly, the top 5 were all directly related to meme coin volumes. And then I think I had to get to 7th before I got to my like most non-meme coin. It was GEODNET, which still very, very directly gets a lot of revenue from meme coin volume. But to kind of like take the other side of the Camino swap thing, I think I wouldn't say it's defeat. I think it's just realizing that through their like lending platform and like their LP multiply product that they had, they actually were swapping a lot. And then I think internally they just built better swapping engine than what was out there. Now they're kind of releasing it to the public. But going on like the growth side of things, agree. I think there's some uncertainty, but I think kind of what I've always said, like I think meme coins will always come back, and I think they'll all be on Solana, like we said, with the high level volumes and just metrics that they're performing at. And then I think payments. I think that's like the thing I'm looking most forward to is with the stablecoin bill coming out and kind of getting a little more like regulatory out there. But that's still a pipe dream, I know, but like hopefully optimistically bullish in that route. And I think that's where Solana can kind of take a turn and not be just like the speculative chain and have a real use case through payments.
What about DePIN?
Yeah,
DePIN always. DePIN is the frontier.
DePIN's the frontier. Yeah, I definitely think like Solana in everyone's mind is still the best chain in crypto right now, like the best general purpose chain for sure. And it's probably unfair that we have a higher bar for them than everybody else, but that's just kind of the reality of the situation. Like we spent all of last cycle conditioning ourselves that Solana is the future, and now it's like, okay, like what's next? And it would be really bullish if these apps successfully expand their offerings or vertically integrate and start becoming these like gigantic dominating businesses. Like I think that would be very bullish. So yeah, not going to say that this is because I'm not here saying Solana is cooked. I'm just saying that like if we try to apply the same standards as we've held Solana to all year, it'll be interesting to see what happens next and where they can kind of find the next stage of growth. It could be meme coin still, but I think everybody agrees it would be nice if we see something else come about that generates real app revenue.
Totally agree. I do think you wrote the "Is Solana cooked?" question though in the docs for the show, but I hear your answer. I see what you're saying, and but yeah, I think payments is the growth story that like is probably the most realistic. Something I've always been, and actually the reason I got into crypto was here about Axie Infinity and like gaming. I'm just waiting for that to take off. But we do have some exciting things to talk about gaming with the gun launch with Off the Grid launching their tokenomics and launching on the Binance Launchpad. But then a little negative side with some projects running out of money, shutting down. So Chris, what's going on with the Off the Grid gun launch, and then little double-edged sword with the rest of the gaming market?
Yeah, so I think obviously the gun launch was probably the most anticipated token launch, like arguably that we've ever seen in gaming. Because, I mean, like they made a really great AAA game. I think by all standards, it's one of the best crypto games that's been made so far. And I think that a lot of people within the gaming community were looking to this as like, okay, if the gun launch does well, then there's kind of like some hope for gaming tokens, right? And if this doesn't do well, then we're kind of like fulfilling what we're kind of all thinking, that gaming tokens are pretty cooked. So I think there was a lot of question around the tokenomics. Like when it first came out and they gave like the breakdown of it, I think like pretty consensus people were like, this is not great. Like this isn't awesome to see this breakdown. And obviously, it had a relatively low float, compared to the FDV coming out. I think it went down maybe like 40% since its listing, maybe a little bit more. So
launched at 60 million. Now it's down to 30 million, and it's only at a 6% market cap over FDV.
Yeah.
I think only 4% of that was just committed to the community.
Right.
The community was like mostly Binance launch pool, I think.
Yeah.
So People are not very happy with that.
And I know that like, the Delphi guys, I think have been kind of like, quote unquote, dispelling some of the FUD. Like I still need to read some of the threads that they've wrote about it. But like on the surface, I think we can all admit that's not great, right? Like to see out of a new launch. And so this thing going down, like, yes, it has an impact for Gonzilla, but it also has a broader impact on the gaming ecosystem and like gaming tokens, which by all standards have been kind of uninvestable. Like if you really look at those compared to the rest of the market, they've been underperforming since like the end of Q4 2023. And it just raises questions, right? About like, is there going to be a tokenomics model that works for games that makes these things investable? I think that's still a question that's really up in the air. I know that there's a lot of great teams working on that. Pixels in particular, they've been really focused on making their tokenomics sound, making it so that they have a token that can accrue value in the long term without being unsustainably inflationary. So I think jury's still out on that. We need to see some more proof of concept there. Gun launch was obviously a little bit disappointing, but yeah, I guess we'll just have to see from here what happens. Obviously, we're not going into an amazing environment for gaming too, or just for token launches in general. So maybe not the most optimal timing, but I think long-term, I do have faith that someone is going to crack this code eventually. But if we want to talk a little bit about some of the not so great news about gaming studios shutting down and kind of running into problems, to me, this is more of a signal of like taking a step back and realizing that the projects that we are investing in and the projects that exist in this ecosystem are early stage projects. And look outside of crypto, like 99% of the companies at this stage eventually shut down, right? Like they don't make it. And I think like as an investor, you should always have that in your mind when you go into an investment, thinking about, am I going to be investing in this token for short-term play, a couple months? Do I think this is really going to succeed on a longer time frame, maybe a couple of years? So I think this was a reminder of that this is just a natural progression, right? Like companies run out of money, companies don't get traction. It is what it is. And I think, unfortunately, we're seeing that a lot of that all at once within gaming, but it's greater than a gaming problem, in my opinion.
Yeah, to add some color, we saw the Treasure CEO leave, the Wanderer CEO leave, the Blade of God X's web team brought to their Web3 employees, and the Valeria game shut down to a lot of teams. But then also kind of highlight or bring it back to the conversation we just had where with the Jupiter acquisition, like I think what you're talking about is just a lot of consolidation in the market. I don't know if you guys are seeing that too, but is that that's probably a good sense, since I think a lot of people underperformed compared to Bitcoin just on their treasuries and a lot of other stuff last year, and everyone thinks crypto's at this like top, but a lot of these Web3 companies, me excluded, don't own enough Bitcoin as they probably should have last run up in last year. So what do you guys think? Is this consolidation a good thing? Are we going to keep seeing this? Like, is it all just like macro driven, kind of what we started with at the top of the episode?
Yeah, I've been saying this. If you just look at a cycle from like an altcoin perspective, like I think it's very clear that we've just ended the cycle. Like I think most alts have washed out 50 to 70+%. Even some of the top alts have kind of, I mean, the Radium chart has been just absolutely disgusting. I think a lot of these fundamental charts have been pretty bad. So, I mean, Bitcoin has kind of done its own thing this cycle relative to the rest of the crypto economy, but I think you can fairly say that this is kind of a complete washout now of some of the alts that are not going to stick around, that we were kind of having fun with this cycle. Some stuff might still hang around. I think we've definitely created a few apps that are just going to be around now for hopefully at least multiple cycles, Athena, Hyperliquid, etc. But yeah, like I think this is the end of an altcoin cycle, and that's a good thing. Like I think eventually something is going to come back, like some meta in some form that you can get exposure to. You're going to need macro to cool off, but yeah, I wouldn't shy away from just looking at interesting things out right now, playing around on chain, seeing what's happening, maybe farming some points here and there. Kenji, I know you unmuted your mic. You have any thoughts?
I was just going to ask, what do we mean by consolidation? Just like tokens going to zero, which it seems like we're talking about. But yeah, no thoughts. I think Sonny hit it all. Like, how would I frame it? When we're in a hot cycle, a lot of protocols and companies have a chance to prove out their product market fit. And then once that kind of deflates, we get to see who the winners are. And so it feels like we're in that type of mode where we get to see what survives, what doesn't. And then in the meantime, you get to look for new things. So just basically echoing Sonny.
Yeah, and I do think that is a good thing. Like I think crypto, we see these really rapid cycles. And like at the end of any cycle, any sort of speculative cycle, you see like almost everything get washed out. The strong companies keep on building and a couple long-term winners emerge from that. So yeah, it's a little bit painful if, like from an investment standpoint, but I think in terms of overall industry growth, it's good that we see this and, the teams that are dedicated and the cream rises to the top and then we're in a better position than we were when we were just speculating and everything was going multiples up.
A quick little shout out for the
It also
Gam-
quickly, sorry, I
got
was
it,
just
got
gonna
it.
say, like another thing that happens when things go up and down is like on the rise, we also get to see what we need to build next. So like that's where the whole like scaling infra play came from last cycle, where like we needed more block space and now we have more block space. So I don't think there's like a glaring obvious thing that we need to fix. Maybe chain abstraction falls into that category, but that's also a fun mind like thought piece of like what do I wish we had now? Like in the last cycle, what do I wish I could play with? And then you can start to look for people who are building that or build it yourself.
I guess the irony there is that like that does happen, and then this cycle, because gas fees on ETH last cycle were so high, we just like completely overbuilt like infra wise for block space more generally. And like I wonder if some of this consolidation, like you had Jupiter buying Moonshot earlier, and now you have these Solana apps that are kind of vertically integrating to kind of, or yeah, just to like be ready again for this next wave, volumes that come on chain to trade again. And it's like, what if we're just overbuilding all of that as well, and like these apps are being tailored to basically what Sonny was saying about meme coin trading, and those volumes don't come back, and then next cycle we are left with we have a bunch of this infra that's just like could be used for other things, but maybe doesn't get the usage that we built it out for. And I feel like there's a broader concern about like, okay, like what if the infra trade in general is just like permanently cooked? And a lot of like, someone posed this as like, what if all the businesses and institutions now just come in to capture all of the value while we built this like somewhat commodified infrastructure of L1s and L2s, and then they just take all of the value because they have the distribution. It's the same, and then it's the same thing what you're saying about like Camino and like all of these like decent DeFi apps on Solana. It's like, why are they expanding to new verticals if they think their original use cases like lending is still small? Like, why is it still small? It's still small because the distribution is to like a minimal amount of this on-chain user base, and it's like you're not going to accrue a bunch of value and get a bunch of user growth unless you have the distribution and like the companies that do. And not just saying this is just like Robinhood or whatever TradFi institutions, but like those consumer facing apps that do have the distribution could theoretically be the ones to take all of the value, and a lot of these like on-chain protocols get left sort of not in the dust, but like it's hard to compete with that for next cycle maybe.
Yeah,
Just
that was,
another bearish rant.
Yeah,
no, I totally agree.
hopefully,
We didn't have enough of those this time, so let's just throw another one.
yeah, hopefully, lightening up the mood a little bit. I know Chris was talking about like the tokenomic problem with gaming. Dylan, you've been speaking a little bit about the like tokenomics like problem with DePIN. Is there any light at the end of the tunnel there? Like, what are you seeing in your in the DePIN land?
Yeah, so I think DePIN's interesting. I think it's down market cap. It's down 54% quarter over quarter. So it's vastly underperformed most of crypto. Which like I don't think anyone's like actually that concerned about, because DePIN's really just like in this building phase, right? So like last year we got a lot of excitement. We had a lot of new rounds, new ideas, energy, wireless, compute. So a massive proliferation compute platforms. So a lot of early stage rounds. And I think what's interesting is if you look year over year, we've raised the same amount of fundraising in Q1 2025 compared to Q1 2024. But the number of rounds has decreased significantly. I think from 62 to 36. So what we're seeing is round sizes are up about 76%, while there are much fewer rounds. I think what this is showing is DePIN's kind of moving more towards scaling revenue, scaling DePINs that kind of have some level of product market fit, rather than just like bootstrapping some new ideas and new protocols. And with this, I think there's a lot of hard problems in DePIN. I think like this is where the industry is shifting. So how do we grow demand side revenue? Last year we saw, maybe 50 or so million in revenue across all of DePIN. We had a few protocols hit 7-figure revenue, like Helium, GEODNET, a few compute protocols, Glowe. And the question is, how do we scale those revenues along with solving like these other hard problems in DePIN, like how do we do verification? How do we prevent double dealing? Just like very like technical problems. So what we've started doing at Messari is like trying to create the language, conceptual framework to understand how DePIN really works and how we can like scale both the supply side, the demand side, how we can finance DePIN. So how can we get credit basically so that, a DePIN operating company can scale a compute farm or a solar farm or acquire very expensive DePIN infrastructure. So yeah, like that's what we're starting to do. In like a recent report, we introduced some language to think about scaling the supply side. So think about like concentrated scaling DePINs versus distributed scaling DePINs. And what this means is basically how much infrastructure can be concentrated within a single unit of territory. For example, like nodes within 1 square kilometer. And what this number kind of indicates is how much you can scale DePIN as a single entity. So like if you're a DePIN like GEODNET, where like one device can cover 30 kilometers of territory, you really can't scale that as one person. You can buy one device, put it on your property. That's about it, right? So like you have to scale more in a distributed fashion horizontally, where you have a lot of retail participants putting up this infra. In comparison, if you're like a solar farm or a compute platform, basically creating a fungible resource with like effectively limitless demand. So you can concentrate a lot of infrastructure in one area and you can basically just scale that up. So just buy more infra, maybe you're financing it, you're contributing more to the protocol, and that way the network can scale. So yeah, we've been thinking about certain terms like CapEx or cost per node. What does that mean about whether they can scale in a distributed fashion or a concentrated fashion? We'll also think about terminal supply capacity. So what's basically the full supply side that a DePIN needs to basically to provide full coverage for a resource, or is it limitless? Like GEODNET can support like 80 to 100,000 nodes on the supply side globally, only needs about 20,000 for effective demand. Versus compute can basically, you need limitless compute, basically, endless compute. So yeah, we've just been starting to think about that. We're gonna have a lot more work on financing, more on the demand side. And the hope is to like help the industry really accelerate growth, figure out how to finance itself, actually grow revenue, and like actually become a real sector, a real business really within crypto, so we can solve all the problems that we've been talking about throughout all the podcasts with the collapse of memecoin trading and not having actual applications.
Dylan, which subsector are you the most excited about in this scaling part?
I think it depends. Like there's certain DePINs where like you can scale the supply side very fast, like GEODNET, and then you can just basically focus on the demand side and not worry about supply at all. So then like you can concentrate all your resources. That might get demand and revenue faster. That'll accrue a lot more value to token holders. So like that's interesting. And then like the other most interesting are just the largest TAMs, so like energy, wireless, compute, where like these DePINs are basically building for spaces that have tons of tailwinds. Like, we need power for compute. We need compute. We have an outdated grid. We have outdated infrastructure. That's part of the reason why we have tariffs. So we need to reshape our energy industry. We need to transition to clean energy to prevent CO2 emissions and all that. So I think just like massive catalysts, massive TAMs, DePIN can solve these problems in unique ways. And we can scale these also infinitely if we get the unit economics right. So those are the two types of DePINs.
Looks like we're buying DePIN tokens. Let's talk about like kind of what are we doing on chain? What are we doing while like prices are down? I know there's some test nets, MegaETH, Abstract. I'm personally playing a lot of Monad and Animals on the Monad test net. So what are you guys doing right now as prices are kind of uncertainty and it's a little tougher to trade out there?
I'm doing Abstract. I've been on Abstract since week one. I've been having a pretty good time with it, honestly, too. They have a couple games that are pretty good. Some relatively interesting stuff like around gotcha, little like kind of scratch off tickets that have, but like the actual aesthetics of the website are really cool and like differentiated from a lot of consumer apps you see. So like literally even just going to there puts a smile on my face because I like how it looks. And yeah, I've been having a good time with it, racking up XP. So if you're feeling a little depressed on the trading side, I recommend coming over to Abstract, trying out some of the consumer apps.
I'm also an Abstract fan. I've been playing the games there. I think I've mentioned before I like it because you can play the games without having to port like a massive like portfolio of assets. So you can kind of just be a user without having a ton of value at risk. And obviously like you're going to get lower XP when doing that, but it's still a fun way to play around. I also think like a lot of people dislike the Abstract kind of farm, if you want to call it, because they think it's like a very low probability outcome of like one of these things hitting, one of these games or one of these streams hitting. And I agree with that, but I also think the upside there is massive because they're going after like a completely different use case. So no one else is focused on strictly like just gaming, just consumer, just like these streaming applications. Other people are kind of going after the established. And I think the likelihood you hit on something new is higher than the likelihood of one of these other alt L1s. Not all of them, but like stealing share. So I think that's why I find it interesting. I mean, max leverage news trading, obviously, it's so fun. And then also, I think it's a good time to start looking into things that you maybe put on the back burner while prices were hot. Dynamic Tau comes to mind. I finally bridged over to Tau and have started messing around there. But yeah, I think it's a time for learning, experimenting, and just figuring out what you like, what you're good at, and getting ready for the next run.
I have on-chain responsibilities. I have to log in every day to feed my MegaETH fluffle so that it doesn't die. I have no idea what it's going to do. I hope we get some clarity on that soon, but that's basically what I've been doing. But also just really bullish MegaETH in general. The testnet just went live in between our last podcast episode and this one, and I think a lot of people before the testnet kind of saw like the 100k TPS, 1 millisecond block times, and went like this is not even possible. And what we're seeing on the testnet is it's actually pretty close. Like they're actually not almost there, but they're at what I think 20k TPS, 1.7 gigagas per second, 10 millisecond block times, which is absolutely unprecedented for general purpose blockchains in crypto. Orders of magnitude more performant than anything that we've seen, particularly in the EVM. And, we were talking a little bit earlier in this episode and the last episode about how infrastructure is getting washed out as an overall play, an overall meta. Like we've gotten to this point where there's just so much block space that these small iterations don't matter anymore. Like users are fine on Solana, but I mean, you can kind of feel it on the MegaETH testnet. Like this is probably like a real infra play that's kind of caught up in this bearish infra wave because it's just so much better from like a technical standpoint. And I don't think people are prepared for that. So I think there's some value in playing around with these MegaETH testnet apps, looking at the Mega Mafia, seeing if there's anything interesting to do because one, you'll probably be blown away by the experience, and two, you might set yourself up for some nice airdrop / farming opportunities in the future. And I think I'm just pretty bullish on that ecosystem in general. And so, yeah, feeding my fluffle every day, logging to testnet, using the faucet, trying to play around with some of these apps, I think is what I'll stick to.
I like the idea of like, I think they're partnering with Cato to just like trade tokenized mindshare attention. I actually think that's like a cool crypto native use case. That's like, it's kind of like going one step further than Polymarket, where, that could just be so generalizable to any trend that's going on. It's like, I could see that appealing to people more than these betting markets where they have to look at probabilities. Like, I think a lot of people just want like, oh, like I see this meme or I see this trend in the real world. Like, I want to bet on this number going up. So I don't know, like I haven't used it yet, but I like the idea of it. And I feel like that's pretty unique and kind of stands out from a lot of potentially more consumer facing stuff.
I think that people also don't like that it's not a binary outcome. You can bet on a trend and still get that same type of like upside you would see in liquid tokens versus something like
Right. Yeah.
Yeah, I'm really bullish on that. I think that for Kaido, they're using it as the oracle. I believe that's
Okay. Yeah.
Yeah, I've got my eyes on GTE mainly because I think on-chain collabs are the future of trading, and to be honest, you just can't build an on-chain collab yet on general purpose blockchains. You can't build one on Solana. You can't even build one on places like Base. You can build it on Hyperliquid because, well, Jeff is cracked and he's built an entire L1 configured to facilitate this one order book. But if you want to build it on a general purpose blockchain, you need sub 10 millisecond block times. You need high throughput, low transaction costs that are predictable, not just low, where you eliminate the risk of congestion pricing. So market makers don't have to constantly change their models to account for changing unit costs. And MegaETH can do all of that. And so I think people are always like, why do we need these new chains? Like, what are users going to get out of it? Like, we all know users want applications, but I think a lot of these newer chains, like MegaETH especially, is just sort of taking this approach to appeal to the builder, where one, like from a technical perspective, you can build whatever you want on here. There are no performance limitations. The gas limit is so high that we can support all of these complex smart contracts. Whatever you can imagine, you can build it. And they've also taken a really solid approach to building a dev community. And so you see all these cool apps on there like Noise, like GTE, with founders that are on CT and getting a lot of traction. And I think like there's just hasn't been a lot of excitement if you're an UVM builder. And so this is kind of like this is almost like a relief.
Yeah. And just to touch on MegaETH a little bit more, because I think this is important to talk about. I know that we're going over, but I think it's like their go-to-market strategy is one of my favorites that I've seen with Mega Mafia. Like, I really like it when chains take an opinionated approach and really like heavy BD supporting the apps that are on the chain. We saw this with Ronin. Like, Ronin was permissioned, right? But they handpicked which games were going to come onto the chain. And that worked out really well for them. So I think, like, we're kind of used to this heritage of maybe not taking an opinionated approach, like, right, like Ethereum is intentionally not opinionated about it. But I think that we've seen through multiple cases, like, taking an opinionated approach works really well. And so aside from the actual technological 0 to 1 moment with MegaETH, I think that the way that they're approaching this from an ecosystem development standpoint, also from the standpoint of like doing around on Echo, right? Like that community building, like that stuff gets me really, really bullish on that community and what's going to come out of that.
Dylan, what are you doing on chain?
Dylan, you're just not on chain.
Dylan's in the middle of solar farms, walking around inspecting real life hardware.
I've been doing some robots, some protobots. I don't know if that counts as on chain. Yeah, I think like MegaETH, like the GT stuff, I've been playing a bit around with abstract, just kind of going off what the rest of the team's doing. I want more things to be done on chain, and with that, I think we need to develop applications, hence DePIN. And before that, once we do that, I think I'm all in on going on chain. But I think it's reflexive, and once the applications come in, then the infra matters a lot more. And I think the infra builders are going to tailor their decisions in new directions or in different directions once we actually see some PMF.
Also, I think Helium Mobile counts as being on chain. So some of us are on chain that way.
Yeah, Helium Mobile's on chain for sure. Yeah,
The frontier of the on chain. I like it. So I guess, be worried out there. We're still a little uncertain with the markets, but thank you guys for listening with us for this past hour, talking about Tariffs, some super apps in Solana, some test nets. Seems like a lot of test nets out there to keep you busy, not waste chopping yourself up in these unpredictable markets. But thank you, and this has been Shoot the Shit Pod 2 with Kenji, Chris, Dylan, Sunny, Andrew, and myself, Matthew. You can find us on Messari.io. And go and see all these GigaChads reports about all the stuff we talked about here. But thanks, guys. Catch you guys next time.